Hi everybody, it's Kevin Wadsworth from NorthStarBadCharts.com, of course, and I thought I'd take the opportunity to have a little walk through and explain the big picture with one of the cryptocurrencies at the moment, Stellar Lumens, and just explain a little bit about how technical chart patterns can help us to stack the odds in our favor when we're investing and pick points when it's good to enter the market and when it's not. So the price action of Stellar Lumens in 2018 had risen very, very sharply and become very stretched above the moving average. And when that happens, it very often comes back down to test the moving average. It then went on to fall below the moving average and start a sort of a protracted downtrend that lasted quite some considerable time. But when we get these downtrends, they're very often in the form of some kind of bullish, and when I say bullish, I mean long-term bullish wedge or sort of bullish descending wedge pattern. I also, at this point, start putting arcs on the chart because it gives me an idea that if price breaks down below this wedge, where the arc, which pretty much always catches the price and stops it falling any further, where that sort of support level is. A little bit difficult with Stellar because we just had the one touch point, well, this point here, and then this sort of major touch point here at number 1. Nothing happened as far as the arc's concerned until we hit the bottom all the way down here in 2020. And 3 things happened here that I keep mentioning, which told me it was time to invest in cryptocurrencies, not just Stellar Lumens, but Bitcoin, Litecoin, Ethereum, and others that had enough price history to sort of make these deductions. I've got the 30-week moving average on here. Price bounced off the arc, and it's not easy to know exactly where the arc is at this point because you can extend it sideways to some extent, left and right, until you start getting some touch points on the right-hand side. But there was a nice arc which did fit with this sudden price reaction upwards. But not just that, but we broke out above the long-term downtrend line. We had a sort of a little false breakout here before the arc bounce. Very quickly got back down below the 30-week moving average. But at this point here, we had the arc bounce, the move above the declining trend line, and simultaneously the move above the 30-week moving average. So when those 3 things happen together, it's at or very close to a long-term bottom in the price. So that's where I got interested in cryptocurrencies and made some investments. So you can move, as we move through time, you can see how price has reacted and bounced off the 30-week moving average, staying above it. It might seem quite dramatic when price falls from 22 cents all the way down to 10 cents. It's more than 50% price drop. But when you look at the long-term gains that are to be had in this sector, then it pales into insignificance really, and we ended up sort of 4 times higher at 80 cents or even more. So what's happened lately? Well, we've been building out an expanding rising wedge, which is very often known as a bearish rising wedge, because they indicate that at some point price is going to break down and probably retrace most of the move, if not all of it. But if I just zoom in a little bit, instead of using the weekly chart, we look at the daily chart. You can see what's happened just recently is that we've had a declining resistance line and a declining support line. Now these form a bullish descending wedge because the highs are lower and the lows are lower, and they're converging towards a point. And the point they were converging towards was the arc, which if I just adjust it to where it should be, I just managed to knock it a moment ago. You can see the price came back down and tested the arc to perfection. Would have been a brave person at that point who went all in, but if you did, you already made about 30% profit in the space of just a few days. So price is now broken out, and that's very bullish. Next thing to do is to break above the 30-week moving average, which I just need to go back onto the weekly chart to be able to tell you what that is. Let's go back. The 30-week moving average is at 37 cents. So it's up here at 37 cents. And we've got the target box there. Of course, we reached the target price a while ago, but the target time was always going to be later. So it's unusual to hit the target that far ahead of the target box, really. So what I would expect, technically from the chart, forgetting all fundamentals, is for price to rise here towards the target box. And if we are still in a cryptocurrency bull market and Bitcoin makes new all-time highs, this will continue upwards to the, or the target at least, would be the upper resistance line here, which towards the end of this year is somewhere around $4. Sounds crazy, doesn't it? Because that's, where are we? That's 15 times where we are now. So seems unrealistic, but that's what the chart says. So we'll just have to monitor it for the time being. And the rising support line, of course, keeps on going. So as we get towards the end of this year, the support's around about 42 cents or something like that. So it's going to be really fascinating to watch what happens now and see if we can get above the top of the arc and to new all-time highs. If that happens, then, as I say, the target is much higher. So that's it for now. That's a walk through the big picture for Stellar Lumens. The other cryptocurrencies are doing very similar things at the moment. So a lot to watch, and I'll be posting the detailed chart analysis on cryptocurrencies, as well as the mining sector and other things, of course, on NorthStarBadCharts.com. So if you want the detailed analysis and much more of it, yeah, just join. It's only $10 a month. So go ahead, see if you like it. And if you don't, feel free to leave, and there's no harm done. That's it from me for now. Thanks for watching, and thanks for listening.